So let me start. Okay, there's a lot of material to cover. As you can see, we're going to cover a lot traditional versus digital. So let's look at essentially what money laundering is. I think all of you know this. Is making illegally gain proceeds, dirty money through whatever means, drug money, prostitution, whatever, appear legal or clean. A number of legal and regulatory systems, however, the term money laundering has been extended beyond simply money cleaning to financial and business crimes. It's also sometimes used more generally to include the misuse. The entire financial system misuse is considered money laundering. Okay, so traditional currency, credit card, securities, all of these things, if it is misused, it is considered as money laundering. Okay, so the term money laundering now has been actually extended also to look at terrorism financing. Okay, the evasion of international sanctions and so on has also been considered as part of money laundering. So when regulated the financial system, most anti-money laundering laws link money laundering, which is actually concerned with the source of funds, how we are getting this dirty money, with terrorism financing, which is concerned with the destination of funds. So the money laundering steps, there are three things. Now you see that in traditional and in digital cryptocurrency, these three things are there, and that is placement, layering, and integration. And I'll explain all of this as we go along. Okay. So first, the illegitimate funds are introduced into the legitimate finance system. That is placement. Often the initial placement may not make it that clean. For example, the famous example is that you go to a casino with your dirty money, buy chips, play with a little bit of it, maybe 1% of the chips, take those chips and cash it in and get a check. Well, it is somewhat clean, but not completely clean. So that's placement. Then what you do is you take this money and you send it all over the world to different banks and all sorts of things, okay? Spread it all around, and that is called layering, okay? So you go to banks in the Bahamas, British Virgin Islands, you name it, you send it all over the place. And then the third step is you bring it all back, okay? And you integrate it now into the financial system, okay? And this is by buying into maybe companies, real estate, whatever, and that is integration. So these are the three steps that are there in traditional and in the digital. So you can see the collection of money, the placement, it doesn't quite get clean fully, the layering, okay, to make it a little bit not sure from where the money has come, and then the integration. Okay, so let's look at placement quickly. There are many, many ways of placing the money, okay? These include bank methods such as Smurfing. I'll talk to you what Smurfing means, okay, known also as structuring. The word structuring or Smurfing is used concurrently, using legitimate cash businesses such as casinos, where there's a lot of cash being done, currency exchanges, and also double invoicing. These are some of the ways of placing the money. Some typical types of placement will be discussed now next. So first of all, structuring or Smurfing, okay? Essentially, you're duplicating things over here. It's often known as Smurfing. It's the method of placement whereby cash is broken into smaller deposits of money, okay? It's used to defeat the suspicion of money laundering to avoid anti-money laundering reporting requirements. So the typical example is to have it as under 10,000, okay? That would be a typical way of having the money laundering. Next is a subcomponent of this is to use smaller amounts of cash to purchase bearer instruments such as money orders, and then ultimately deposit those again in small amounts. So once again, you can see you're making the big amount into a smaller and smaller amounts. This is essentially what is being claimed as the allegations against the Commonwealth Bank of Australia, a big Australian bank, okay, as I will discuss later. Okay, now the other one is cash intensive businesses. This is a very famous one. Okay, here a business that is typically expected to receive a large proportion of revenue as cash uses its accounts to deposit criminally derived cash. So one example would be casinos. Okay, so here lots and lots of cash is used. So you will see later on, I'll give you an example of Australia's Crown Casino, where huge amounts of money were brought in to essentially do the placement. Then we have distilleries, again, where lots and lots of cash is being used, okay, essentially in the liquor business and so on. Again, the example of this. Parking garages, again, using cash. Massage parlors and strip clubs, which is essentially legal in Australia. Okay, a lot of cash is exchanged there. And these are things, these enterprises can often operate openly to derive cash from its legitimate business. Okay, in addition to dirty cash, which the business will claim as received in its legitimate operations. Along with the legitimate cash, this is the dirty money that is obtained. Okay, so service businesses that are best suited for this sort of method is those that have little or no variable costs, okay, and or those that have a large ratio between revenue and variable costs. So this makes it difficult to detect discrepancies between revenue and costs. You can't do any of those ratios that we accountants like doing because it's difficult to see patterns in this one. For example, in the case of a casino, an individual can walk and buy chips with illicit cash, as I mentioned before. The money is now placed. The individual then play a relatively short amount using a few of the chips and cash in the remaining chips as winnings. Okay. He or she then takes the payment in a check or at least gets a receipt. They can claim the proceeds as gambling winnings. And I am sure in Sri Lanka, we have casinos there, but gambling winnings is considered non-taxable. Okay, so here is a famous case in Australia, a huge case, our biggest casino. This is the one in Melbourne. Okay, in 2019, it was reported in the Australian media that a high roller roam at the Crown's Melbourne casino, which was run by the Sunseeker Junket Company, was in fact operating a cash desk. So these people went and got high rollers to come mainly from China, okay, into Sri Lanka's casino, and they were bringing huge sums of cash, accepting cash deposits from patrons, okay. And then in October 2019, a television station, ABC in Australia, actually filmed cash being handed over the counter in blue Aldi cooling bags. So these are supermarket bags, huge amounts of cash were being handed over. They filmed it and showed it on our television. So this triggered an inquiry by the Parliament of New South Wales because Crown was trying to open another casino in New South Wales, and that triggered an inquiry called the Burgeon Report, which was essentially finally came out about in October, right, last year. They found that there was no doubt of money laundering involving an international trafficking syndicate. Okay, the casino was also used by hostile foreign powers to subvert Australian sovereignty. Now, this is the dangerous one. Okay, not only is money being laundered, but this laundered money is going to, as lobbying fees or whatever we call it, to bribe politicians. Okay, and I'm sure it's happening all over the world. Okay, where this sort of money is then used, okay, for giving political or getting political favors. So that is all in the report. Okay, so in other words, what happened after this report was Crown has not been given a license to open a new casino in Sydney, in New South Wales. Okay, so next method of placement is bulk cash smuggling. I'll go through these quickly. This involves the physical smuggling of cash to another jurisdiction, deposited in a financial institution such as an offshore bank. Okay, and there are plenty of offshore banks in Bahamas, British Virgin Islands, and so on, that is accepting this money. Such entities are jurisdictions that allow a greater level of bank secrecy and less rigorous money laundering enforcement. We all know about the Paradise Papers, okay, and the Panama Papers that came out. A number of Sri Lankan names also involved in those things that came out with WikiLeaks. Okay, so these are some of the things that happen. Many jurisdictions are enacting Know Your Customer KYC and enhanced due diligence legislation. I'll talk about that in more detail later. Okay, to counter such money laundering placements, which will be discussed later. Okay, the next one is the use of corporate entities. Okay, these are shell companies, often called rat holes. Trusts and shell companies display the true owner of the money. Okay, trusts and other corporate vehicles, depending on the state of jurisdiction, such as the state of Delaware and USA, need not disclose their true beneficial owner. Now, with my CMA students, many of you, I've discussed the situation where you can make any profit that you want, pay no taxes, and increase the size of the company, all legally. And one of the important things that you have to go through a Delaware company, where the state of Delaware does not have to disclose who owns the company. Only the directors have to be disclosed, but not the shareholders. So there's, I mean, these are USA, yeah? They're all the country that wants all the KYC. That is where you can send the money through. Such companies are sometimes referred to as rat holes. By the way, if anyone is interested in setting up a Delaware corporation, you can do it in your kitchen table in Colombo, okay? And you can go online and pay a small fee to the accountant or whoever who will be your front man, and you can open one of these accounts. I'm not telling you to do it, but it can be done from anywhere in the world. Okay. Then there are other corporate entities that you have. Okay. Round tripping. Here money is deposited in a controlled foreign corporation offshore, preferably in the tax haven, where minimal records are kept. Then the money is shipped back as foreign direct investment, exempt from taxation. So essentially, I've shown how this can be done to the CMA students. Money goes out as expenses, but they then go to a offshore account, and then it's brought back as an investment in new shares. Okay, and hence the company goes. These are all been done by big companies even today. Very difficult to catch if it's going through a Delaware corporation or something similar. Okay, so these are round tripping. Okay, making all over the place the money is going until it ends up in where you want it. A variant on this is to transfer money to a law firm or a similar organization as funds account for fees. So you are paying fees apparently, but then that whole invoice is cancelled, and the money that is remitted is essentially seen as received from a lawyer as a legacy under a will or proceeds of litigation. You say, oh, I won a case and I got this money. Okay, so these are sorts of things that are happening daily. Okay, the other method, of course, is the final placement is to buy real estate. Okay, all the dirty money is placed and layered and then comes to be integrated into real estate. And you see a lot of this happening around the world. In Australia, plenty of the house prices are going up because of this money coming in big time. Corporations and individuals purchase real estate with illegal proceeds and then sell the property maybe at a later date. The proceeds from the sale look like a legitimate income. Alternatively, the price of the property is manipulated. The seller agrees to a contract that underrepresents the value of the property and receives criminal proceeds to make up the difference, often under the table. My son just went through this situation. He bought a house recently in Melbourne. He was bidding against a Chinese buyer. He won because the people wanted to sell it to him. But after he signed the contract, before he actually bought it, you can do in Australia what is called, you can nominate someone else before the actual sale goes through. And the real estate agent told him that the buyer who lost is now saying that she will give $40,000 cash under the table if my son nominates her name on the contract. He didn't do it, but that's 40,000 under the table there. Now, from where that money came, you can make a very informed guess about that 40,000. Okay, now lawyers and accountants, okay, these are big things that are happening. In 2020, the Australian USA media revealed how dozens of Australian taxpayers were targeted by a Puerto Rican bank called Euro Pacific, co-owned by an American celebrity business figure called Peter Schiff. Okay. The report sparked concerns with Australia's financial crimes watchdog called AUSTRAC that lawyers and real estate agents are being used for money laundering. Very simple. You send the money to a lawyer's trust account, it does not have to be reported. You send the money to a real estate agent, in Australia this is, you don't have to report it to AUSTRAC. Okay. Now this is a very simple loophole. You would think that it should have been closed long time ago. But of course, there are interested parties right up in the government and so on who do not want the loophole closed. Okay? There was some evidence that the laundered money was being integrated in the trust funds of lawyers, accountants, and real estate agents to buy legitimate assets such as real estate and share investments. Okay? Some of these professionals were being unwittingly used, but there were those who were intentionally involved in criminal activity. The revelation sparked renewed calls to the financial crimes experts of the government to introduce long-stalled laws that would force lawyers, accountants, and real estate agents to report their clients to authorities if there was a suspicion. Okay? But it has not happened. Why? Well, you can think about all that lobbying money going to the politicians who are not voting on this legislation. Okay? Then there is other ways of doing it, assigning life insurance policies, okay, assignment of a insurance that is transferred by the holder of a life insurance policy, which is the assigner of the benefits or proceeds of the policy to a lender or assignee for a particular reason, such as the collateral for a loan. In the event that the death of the assignee is paid first, and the balance, if any, is paid the policy's beneficiary. In the case of money laundering, a policy is assigned to an unidentified third party. So while this first part looks genuine, then who is that assignee? Often unidentified, where there is no plausible reason for them to become a beneficiary. Okay? An alien virtually is assigned. So this is where the laundering happens. Then there's trade-based laundering. This involves under or overvaluing invoices to disguise the movement of money. Black salaries. Company may have unregistered employees without a written contract and pay them cash as salaries. Happens a lot in developing countries. Okay, black salaries. So these are all, the black money is then given as cash payments as salaries and then somewhat sent out to the system. Okay, so dirty money might be used to pay such salaries. Now, of course, the ultimate laundry is to get control of a bank. Okay, capture a bank. Now, remember all that laundered money that's integrated, that comes back. Why not use that to buy shares and a controlling interest in a bank? This is the ultimate method to set up a money laundering. Okay. Here, the money launderers or criminals buy a controlling interest in the bank, preferably in a jurisdiction with weak money laundering controls. Okay. Then they move the money to the bank without scrutiny. Now, if you have a bank, forget about KYC and all that. I mean, they might do KYC for their regular customers, but their owners and so on might avoid the KYC requirements and so on. So this is excellent. I mean, if you walk in say Bahamas or British Virgin Islands, virtually every other, in the main street, every other house is a bank. And that bank may have only one or two customers. Okay. These are the things that are happening. Now, in the Commonwealth Bank's case, of course, the money launderers did capture the bank, but they used the bank to do money laundering. Okay, now all cash dealers, especially banks, are required to report to AUSTRAC in Australia international fund transfer instructions, significant cash transactions, and suspect transaction reports. So these are called IFTs and SCTRs and SUSTRs. Okay, these are what they're supposed to do. But essentially, the bank did not do this. They reported that there was 53,506 TTRs that were failed to be reported of Australia. These are single deposits of $10,000 and more, should have been reported but were not reported. Okay. Now, that's the Commonwealth Bank. That was in 2017. In September 2020, a few months ago, Westpac, another big bank of ours, one of the big four, we should deal with Austrac to settle more than 23 million alleged breaches of anti-money laundering, the largest fine in Australian corporate history. Okay. So this is, they had to pay $1.3 billion. So we are not talking about little banks in the Bahamas and British Virgin Islands. We're talking about big banks falling into trouble. And for the bankers amongst you, please note that you might fall into trouble without really realizing it. So this is come up with the term now. Remember I told you about the word smurfing? This is called cuckoo smurfing, essentially where the cuckoo bird lays eggs beside a genuine egg, and the poor mother of the genuine egg essentially hatches the other eggs as well. Okay, so this is the new terminology called cuckoo smurfing. Okay, so of course we need KYC legislation. It's know your customer, very much in the banking and anti-money laundering regulations. Process of a business identifying and verifying the identity of its clients. Bank insurance and export creditors are increasingly demanding that customers provide detailed anti-corruption due diligence information. It is important for CFOs to know that KYC processes are also being employed by companies of all sizes for the purpose of ensuring their proposed agents, consultants, or distributors are anti-bribery compliant. Now, all of this has come from America, mainly. And often if you're using US dollars, then you have to comply with these, okay? And so it's come around the world. So please note, I said it comes from America. Let's see what happens in America later. Okay, so the objectives of KYC is to prevent banks from being used intentionally or unintentionally by criminal elements for money laundering activities. Related procedures also enable banks to better understand their customers and financial dealings. So this helps them manage the risk prudently. Banks usually frame KYC policies incorporating the following 4 key elements: customer acceptance policy, customer identification processes, monitoring of transactions, and overall risk management. These are all part of your KYC. Now, going beyond KYC, especially in America, okay, the US Patriots Act says that there should be even more enhanced due diligence procedures, okay, especially accounts that are private banking, correspondent accounts, and offshore banking institutions. Okay, so that the US Patriots Act says that it shall establish appropriate, specific, and where necessary, enhanced due diligence policies, procedures, and controls that are reasonably designed to detect and report instances of money laundering through these accounts. Now, of course, you might think you're in Sri Lanka, you don't need this, but many of you bankers know that if you're dealing with USA banks, okay, even you may have to follow some of these enhanced due diligence requirements. So here is, I'm not going to go through it in detail, but you can see compliance, define objectives, gathering information, all of that is part of the due diligence high-level process that is required. Okay, so you would think that with KYC and EDD, you will have less money laundering in traditional banks. Unfortunately, that is not the case. Now, this is results on the USA. Yeah? September 2020, not even 6 months ago, a document known as the FinCEN files was released in the USA. Who released it? The US government. It detailed that the US government has failed to stop some of the biggest banks in the world moving trillions of laundered dollars. Now, we are not talking about the British Virgin Island banks. Okay, these included suspicious transactions for suspected terrorists, kleptocrats, and drug kingpins. I mean, all the big guys seems to be involved in this, okay? Well-known financial institutions were all involved in moving funds of suspected criminals, okay? So these included JP Morgan Chase, HSBC, Standard Chartered, Deutsche Bank, and so on. This is in the FinCEN report released in September 2020. And then Bank of New South Wales Mellon, another one. Okay, so really, what is the problem? I mean, you're supposed to file all these suspicious activity reports. What the FinCEN report says is, often banks are filing them, and they're filing so much of them that it's very difficult to keep track of all this, okay? Thousands of documents, suspicious activity reports, so they're full of paper, okay? And really, they are overwhelmed with the paperwork. An analysis on the mountain of suspicious activity reports filed by the bank offers a window into the financial corruption and how governments are unwilling or unable to stop it. And why? Once again, we go back to the lobbying activities that are happening. They showed that dirty money flowed through supposedly reputed financial institutions despite warnings from bank employees. Often the employees themselves of these banks were suspicious, okay? But they had no power really to take it up, and reporters filed and to just filed away, okay? These included profits from deadly drug wars, fortunes embezzled from developing countries, and hard-earned savings stolen in Ponzi schemes. Now, this is all FinCEN, okay? This is not my FinCEN report, which you can all read, can see this happening. So I won't go into this detail, but lots and lots of flagging of transactions, okay, is there, and it's in fact information overload. That's the problem. Okay, so that is traditional. Now let's look at where cryptocurrencies lie. Okay, so digital tokens or cryptocurrencies are the new asset class powered by the blockchain technologies. Okay, in Australia this afternoon, the morning in Sri Lanka, we had a talk given by blockchain exchange people. Okay, so it was an interesting talk. One of the early cryptocurrencies used was using blockchain was the Bitcoin. Okay, I think you all know about Bitcoin now, quite a lot of you. A blockchain is built up using a triple entry accounting system, often called a decentralized general ledger. Okay, so two standard entries are required for anything: a receipt and a payment. But the third entry is a verifiable cryptographic receipt. Okay, that forms a sequence of lists or blocks. So okay, so it is one block. You can see how it moves on to the next block. It's very much in the old system where you had ledger accounts. When one page is over, it says, okay, now we are going to this page. Like that, the blockchain is an electronic version of that. Unlike a standard GL of today that's kept under the control of one organization, a blockchain in its purest form is a common ledger that is accessible to everyone, controlled by no one. So today, your bank ledger is controlled by the bank. Your credit card ledger is controlled by the credit card company. But here, the ledger is looked at by everyone, and everyone in this case would be all the Bitcoin miners who have to verify the transactions. Okay. So how it works is that you have to think of having a Bitcoin wallet. Now the Bitcoin wallet ideally would be, you should have it, which is like a USB, okay, that you buy, or you can have your wallet within an exchange, which is dangerous. But there is a public and private key. Okay, think of it like a post box. The public key is like the opening of the post box. You can put whatever letters in there. Anyone can put letters into it using your public key. But only you can take the letters out using your private key. And while you take it out, you can decide to sell it to someone else as Bitcoins, convert it into cash, and so on. Okay. So the public can put Bitcoin into your wallet, use the public key, but they cannot take it out, okay, of your wallet. Okay, so you can only do that, to do all this using a private key. So here's an example of a public key. It's you can say huge amount of alphanumeric numbers, and here's an example of a private key. Okay, now if you have a private key, please write it on a piece of paper, not necessarily linked to the internet. Fold it up maybe about 3 or 4 places and put it in a safe, because if you lose your private key, then you've lost your Bitcoin. Okay. So if you look at cryptocurrency versus online banking, in traditional banking, you have an account name that is KYC checked. You'll have an account name that is KYC checked by the exchange if you're using a cryptocurrency exchange. Then you'll have a bank account number in traditional banking, and the cryptocurrency exchange has some recognition of you. Okay, it may be a number, it may be an email address or an email case or whatever. They'll have a corresponding way of recognizing you. Then the online banking uses a username that everyone knows. Here it's a public key, but your password is the private key. Okay. And then the traditional transactions are verified by the bank staff, while transactions of the Bitcoin are verified by the Bitcoin miners. Now, how do these people get paid for verification? The bank pays salaries, okay? But here, the Bitcoin miners actually take a small percentage of the transaction that they're verifying. So that's how they are paid, okay? And that payment also would be by Bitcoin. Okay. Cryptocurrency exchanges and ATMs are examples of virtual asset service providers that conduct one or more of the following activities. Okay, so you can actually exchange the virtual assets and fiat currency. Fiat is actual money by decree, like dollars and Australian dollars, rupees, and so on. They can exchange one or more forms of virtual assets, maybe from Bitcoin to Ethereum, or there's a new one called Dogecoin. Okay, set up as a joke, but now it is a huge amount of people have put money into it. Transfer virtual assets, safekeeping and administration of virtual assets or instruments, enabling control of the virtual assets. Participation in the provision of financial services related to a issuer's offer and sale of the virtual asset. So the exchange often facilitates the buying and selling of these assets. Okay, a cryptocurrency exchange uses an order book to match up a buy and sell orders, thus controls all the funds being used on the exchange platform itself. So if you buy a Bitcoin and keep it in the exchange, then actually they control it. They will say this coin belongs to Professor Ratnatunga, but they have both the public and private key for it. Okay, so they can sell it on your instructions, they can sell it and give you the money and so on. Contrary to popular opinion, it's quite easy to link Bitcoin transactions together in order to identify users. And that's important. Where money laundering is concerned, theoretically, it's very difficult to launder Bitcoin money because you can trace every single part of the blockchain right to its source, theoretically. And also fintech and regtech software are often used to track transactions on public blockchain. So these are lots of technologies there to trace this. So it appears that it's difficult to do money laundering with cryptocurrency. Okay, so here's a typical example of an unconfirmed transaction. That is, you make a sale, but until the Bitcoin miner looks at the amount and says, yep, we accept this sale and verify this sale, it remains unconfirmed. Sometimes it can remain unconfirmed for a couple of days. Okay, if the amount is small, there's no incentive for the miner to verify it because they will get a higher percentage from a larger amount. And then there are confirmed transactions after they are verified and it is then transferred or sold or whatever. Okay, so there is KYC technically in VESP or virtual service providers as well. Okay, yeah, you're supposed to do all of the anti-money laundering and KYC customer identification in cryptocurrency exchanges as well. Okay, the implementation of anti-money laundering controls and KYC processes is essential for these platforms to operate online with guarantees and security. One can recognize a baseline cryptocurrency exchange when it complies with the current regulation and regulatory standards. So if you try to open a Bitcoin account with these people and they don't bother about KYC or anti-money laundering, don't want to know your identity or anything like that, be very careful. Okay, they can disappear with your money. So this implies having established processes and controls oriented towards KYC process suitable for customer onboarding, anti-money laundering controls and checks, high security identifier verification, passports, driver's license, all is there, and very strong customer authentication protocol. So in a genuine exchange such as Coinbase and so on, you'll get all these very strict requirements. But if you want to launder money, there's still methods of doing it, of course, and it follows the same three things: placement, layering, and integration. Okay, now some of these use what is called the dark web. Okay, it's a subset of the deep web. The dark web was created for people interested in surfing the internet anonymously. They didn't want to show what sites they were going to, not necessarily porn sites and so on, but there are people in countries that are banned from various aspects of the internet and they don't want to show what they're doing, so they went to the dark web. Okay, it's made up of sites that are not indexed by search engines, and sites are only accessible through specialty networks such as the onion router or Tor. Now, like an onion, there are layers and layers that you have to go through. You can't trace these people easily. Okay. Due to the high level of encryption, websites are not able to track the geolocation and IP of their users, and users are not able to get this information about the host. Thus, communication between darknet users is highly encrypted, allowing users to talk, blog, and share files confidentially. Now, it's useful for countries where there's lots and lots of censorship and regulation if they want to go out. Okay, but of course, it's used for money laundering as well. Now, there's other ways of money laundering. One is called Bitcoin Tumbler. They very much like the layering process that happens. Okay. Let's just split up Bitcoin into various little fractions and reassemble it later. Now, remember, a Bitcoin can be sold into, I think, something like 1/1,000,000th of a fraction. Okay, it can be sold. You don't have to buy and sell an entire coin. So they break it up into fractions, send all the fractions all over the place. Okay, and these are called tumblers. Bitcoin mixes are also known as tumblers, perfectly clean, dirty cryptocurrency by bouncing in between various addresses. These kinds of transactions are called hops and can be done multiple times across Bitcoin addresses on the dark web, adding a layer of obfuscation, that is confusion, or it's not very clear with every hop or layering. Finally, the full amount of the full amount is recombined and through a Bitcoin wallet hosted on the dark web. In this way, people can hide their intentions as well as their identity. Okay, so for money laundering, a lot of this is used in the dark web. There are many mixing services that claim to be reputable and charge various fees depending on the level of anonymity requested by the user. Then, of course, the easier one, in a sense, is to go into a country that has unregulated Bitcoin exchanges that are not regulated. These, of course, have very little KYC, AML procedures, and identity checks, very little. Okay. These exchanges can be used to clean Bitcoin even without using cryptocurrency mixing service. So you don't need tumblers. You go to them and they will accept your Bitcoin. They will sell it. They will make the wholesale anonymous. For example, a user can deposit into unregulated exchange, then swap it for various altcoins, alternate coins. The Bitcoin is not the only cryptocurrency. Each time a trader exchanges a cryptocurrency to another, they are adding a degree of privacy similar to hopping between wallet addresses. The user can then withdraw their cryptocurrency to an external cryptocurrency wallet via other anonymous exchange accounts they own. So a lot of their accounts are in the anonymous exchanges. Okay. Researchers have found that unregulated cryptocurrency exchanges receive an overwhelming majority of internet's dirty Bitcoin. So it is still early days today, and very many countries do not have proper regulation for Bitcoin exchange. Even Australia, we have a good Bitcoin exchange called Independent Reserve. It's not really regulated. I mean, they are asking the government to regulate them, but the government is very slow. Okay, so they have good KYC on a self-regulation, but there are many countries that don't. Okay, then of course you don't have to go to exchange at all. Okay, you can simply sell to a person, which is called a peer-to-peer transaction. Okay, please remember that it's a bit dangerous because those people will have to be told your wallet addresses and so on and so forth. It can even involve a face-to-face meeting, but be very careful because it can be quite dangerous. Okay? It's like trying to exchange gold. Okay. Inevitably, money launderers turn to shady peer-to-peer markets and other nefarious deeds to turn their Bitcoin into cash. Then there are digital currency exchanges. Another related approach was to use digital currency exchange service, which converted Bitcoin into online game currency, such as gold coins in World of Warcraft. It will be later converted back into money. So there are all sorts of like money things, but are not really money. Okay, I remember the time when there was, I think, Apple Play cards that were then transferred back into money. These sorts of things are also happening. It's also worth mentioning that the slightly less legal but still questionable users of these mixing services. Okay, now of course the extension of the blockchain is an area called DeFi. It's becoming very big, where the entire internet blockchain is used. Okay, it's the newest tool in the digital laundry. Broadly speaking, DeFi is an ambitious attempt to decentralize core traditional financial uses like trading, lending, investment, wealth management, payment, and insurance on the blockchain. So it's not only related to a coin. Okay, it is the entire financial system. The core of the initiative is to open traditional financial services to everyone in providing a permissionless financial service ecosystem based on blockchain. So there's no regulation, no banks, nothing involved to do all of these activities on decentralized finance or DeFi. I mean, for the bankers out there, just look at this. These are the new things that are happening. Okay, and it's happening fast. DeFi is defined as an ecosystem comprised of applications built on top of public distributed ledgers for the facilitation of permissionless financial services. You don't have to get foreign exchange approval or anything like that, okay, in this sort of ecosystem. Okay, so DeFi is based on what is called D-app protocols. Running these D-apps on a blockchain, it provides peer-to-peer financial network. It's like Lego building blocks. Every D-app can be combined with every other. So you all these, okay, lending, investment, wealth management, all on top of each other. Smart contracts work as connectors, comparable with perfectly specified APIs. So that's the next stage, and it's billions of dollars now into this. Okay, so let's look, and of course, there's a new thing called, that you might have heard just about a month ago, called NFTs, non-fungible tokens. These are where you actually get a token that is limited only to that item. So here is the person who set up Twitter. He put the first tweet that he ever did as a non-fungible token, and he sold it for $6 million. His first tweet. People are putting digital pictures on the internet and selling it with NFTs. Unbelievable things that are happening today. Okay, so let's look at, to finish off, some research into money laundering activities. A company called CypherTrace, okay, did a lot of looking into where is there porous KYC processes, where there's little or no KYC risk. needing to use conventional money and laundering tricks, and not even tricks like Smurfing. In other words, very poor KYC and money laundering. Okay, so they found it's not Africa and so on, but Europe has the highest count of VAS with deficient KYC procedures. Here's something that will interest you. 60% of the worst KYC countries were in Europe. Okay. 20 in Latin America, 20%, and Caribbean, 20% in APAC countries. US, Singapore, and UK host the most VAS with KYC deficiencies. Remember I told you KYC was brought up by the US governments and banks? They are one of the highest that they don't do KYC. Singapore, we know that some of our bankers have gone to Singapore to live. Very little KYC procedures. Okay, so that's interesting to see. These are report given by CypherTrace. 3/4 of African domicile VAS with weak or porous KYCs are domiciled in the Seychelles. Okay, so it is not developing countries necessarily that have porous KYC procedures. So here's a map taken from CypherTrace. I was very happy to find that we are sort of, Sri Lanka is not too bad, although there are so many rumors going around that we are a capital for it. It doesn't show up here in terms of KYC processes. Okay. So what has happened is that there are, with money laundering, billionaires can be made. Okay, there are many examples from around the world where individuals have started the placement of dirty cash via slot machines, moved to buy an entire casino to make it easier to place larger sums of dirty money, then purchase other legitimate businesses to layer the dirty money with clean money, and integrated the wash money by purchasing real estate and ultimately getting controlling stake of a bank. Now, these people around the world are billionaires today, controlling large legitimate businesses and wielding significant political power in their countries. Okay, they do buy up politicians. We know that. Lobbying, Australia, wherever you talk about it, this is happening. Okay, starting with simple placements right down to controlling a bank and controlling the politicians that make the legislation. So in summary, money laundering is the process of making illegally gained proceeds or dirty money appear clean or legal. There are risks not only in the banking and finance institution, but also in legal, accounting, and real estate professions. Organizations that deal in large quantities of cash, such as casinos and distilleries, also need to be aware of the risks posed. The risks are enhanced with the advent of cryptocurrencies, such as Bitcoin and the dark web network. So effective know your customer protocols are vital part of any anti-money laundering regime. I mean, that's the key. If you have your KYC right, you'd be a long way there. But the problem is that even Europe, USA, very, very porous KYC procedures. Okay, so with that, thank you very much. Now we will open it up for any questions.